Hi guys, Harry Yotis here, professional trader for 20 years now. Started my career in 2005 and still alive in 2026. Okay, so today guys, I thought I'd make a short video on a trade idea that has been forming recently, and it's in the cybersecurity space. Okay, these are the cybersecurity stocks that I'm looking at. This is the First Trust Nasdaq Cybersecurity ETF. It's currently, the last trading day was this Friday, March the 27th, okay, and it had a big down day. The entire index is down almost 4% on the day. They've been getting hammered. The entire index went from like 78 and is down to 60. That's a big drop. That's like almost a third, a 33% drop on the entire index. It's looking very, very weak. This has been a victim of the AI scare, this space, and it's been washed out, in my opinion. Especially after Friday's news, which we will get to right now. Basically, cybersecurity stocks fell under the report that Anthropic is testing a powerful new model. Okay, so Anthropic is testing a model called Mythos, and it's very, very powerful, and it could potentially upend the cybersecurity space because it could like overwhelm the basically the business model. Okay, so a lot of like AI is putting pressure on cybersecurity companies to innovate and fend off these sophisticated attacks that could be even more sophisticated with AI in the mix. Okay, so this is like just like software as a service companies were getting smoked, so were the cybersecurity companies right now, and this is a big drop after. Okay, so why do I like it? It's been destroyed. Okay. So, well, fundamentally speaking, I'm not really into this space, fundamentally speaking, because, if you look at the metrics here, one of the stocks here, Crowdstrike, is the leader here, one of the big dog in the game. And as you can see, the profitability here, the gross margin is good, but they don't make very good operating or profit margin, okay? So it's not something that I would hold for the longer term. Okay, it's not my type of company for a long investment. However, I do see a shorter term trading opportunity here. Why is that? Okay, so, well, it's been washed out, okay? We are also at a point in the market, if you look at the SPY, S&P 500, big down day on Friday. Everybody's scared of the war. We don't know what happens. This dot, forget it. It just denotes the 10% level from top, the minus 10% level, which is at 627-ish on the SPY. So the SPY is not washed out. It could very well go lower, okay? But it's been very, very oversold, if you will. It's attempting to hit the oversold level, and if you go back, it's very rare for it to get to these points. I mean, it happened last time during the tariff tantrum, but if you keep going backwards, you won't very, very rarely see it. Ignore all these lines, but you can just look at the RSI. It very rarely gets to oversold. When it does, it doesn't last that long. You have a quick snapback rally, which is what I'm expecting. I'm expecting a snapback rally in the SPY. How high it goes, who knows? Maybe it probably hits this level before resisting. Then who knows? It could go up or down. The point is I'm expecting a fierce snapback rally because we know that there's a lot of fear. We're at extreme fear in the fear and greed index and 10. During the tariff tantrum, it went as low as 3, and extreme fear in all the sub-indices as well. So basically, I'm thinking the market goes up soon, some kind of vicious snapback rally, and I think the cybersecurity stocks follow suit. Okay, and why do I like it? Well, the technicals, if you look at the RSI here, we'll be getting into this very, very shortly. It's one of my favorite setups for a short-term bounce, is when you have, it's not a timing indicator, but it puts the odds in your favor of a long trade. We have what is called here positive divergence, where the price is below this level. It ticked below and sort of close flat, but ticked below, but the RSI didn't make a new low. So the price made a new low, but the RSI did not, and neither did the MACD, okay? This is the PPO, but it's basically MACD. So you have a lower low on the price, but a higher move on the stochastics, okay? So that's called positive divergence. So it's telling us that we're probably getting close to the, like selling might be getting exhausted and we might get an up move, okay? It doesn't mean that we go to new highs. We could just get an up move back up to 65-ish on the index and go lower, okay? And of course, if you look at the leaders of this space, CrowdStrike, we didn't have that lower low. So the index went lower, but the leaders are sort of leading. So we didn't get that lower low on CrowdStrike. Another big leader is Palo Alto Networks. We didn't get the low there, okay? But the stock that I am looking at is Zscaler, okay? It's like number 3 on the list. These guys did make a lower low, okay? And if we look at the RSI, from this point, we made a lower low on the price, but the RSI is a higher low. Okay, so there's positive divergence, and similar with the MACD. Okay, you have the situation set up perfectly for a buy. Okay, and if you look carefully in the past, when this situation happened again, look here, all the way in the RSI. Okay, this situation here where the RSI here went from lower to higher, but the price went from here to lower. Okay, so we had positive divergence here, and look, we have a snapback rally. Remember, I'm not saying we go back to the highs. We're just getting a quick short-term move, so to buy and get out. Okay, it happened. If you go all the way back, it hasn't happened again in Zscaler until this point in time, where you see this level, the price is lower than the previous low, but here the RSI, the commensurate RSI, is higher. So when you have positive divergence on the chart, it looks like Zscaler goes with it. Okay, so it's not. It just puts the odds in your favor. It's obviously nothing's 100%, but I think we get these snapback rallies. And look, the snapback rally happened, okay, in 2022, bear market. The most vicious, and this is the 2022 area, it comes back, but it doesn't mean it goes to, it doesn't beat the downward trend, but you get this vicious snapback rally, and in 2, 3, 4, 5 days, you can make a lot of money, okay? So that's what I'm looking at. I'm looking at the move in Zscaler to buy and get a quick snapback rally move higher. Okay, I don't see it in Palo Alto, although it will fall. It will probably go higher too. I just don't know how much higher, because the entire index printed that positive divergence. It's in positive divergence territory. Okay, it all depends what the SPY does. Everybody's maximum fear, but I like the fact that the SPY is very, very low, fearful, and these guys are doing a technical pattern that I like for a short-term move. Okay, so that's my 2 cents on cybersecurity stocks. If you guys like what you hear, just like this video, comment below, and I will, of course, answer it as quickly as possible. That's it, guys. Take care.